Hello Maverick traders, welcome out to your currency recap. It is October 9th. Let's jump into it. So there's plenty to talk about today. We had war breaking out over the weekend, and anytime there's war and rumors of war and these sorts of things happening, you turn to the commodity markets and you'd expect gold and oil to be reacting to that, acting a certain way. They did. Crypto did not react in a positive way. Equities, however, were able to shake off the bad news, and that's a case of bad news and good price action. So we need to be very aware of that. We're going to look at some different currency baskets, but there may be a little bit more risk taking that can take place here. And then, as always, we'll highlight some setups. And what we highlighted last week in terms of euro and pound shorts, we're still seeing that weakness, but I'm a little bit more positive on risk this week than I have been over the past few, and I think there's good reason for that. All right, so as we look at why and what was moving, this is the way I've got them stacked. Pound and euro were what we highlighted as bearish candidates last week, and they've really still stayed down in the dumps. Bitcoin, Litecoin, Ethereum, Bitcoin Cash, they're underperforming, breaking lower, breaking trends in many cases. The rest of this, a little bit more risk-on analysis. Aussie, Kiwi, these are the things that are outperforming, and I think equities gave you your cue. So here's a good lesson in trading. Stop and think when a major news story like this war breaking out, and the news is horrific. I mean, obviously, we don't want war. That goes without saying. But you think about the equity market's reaction. Would stocks normally go up, down, or sideways? Well, the knee-jerk reaction would normally be for stocks to sell off. We saw that in the futures over the weekend. They gapped down immediately. Gold and oil gapped up, right? We're probably going to have a disruption of oil supply. It jumps up. When people are worried and there's geopolitical risk and war breaking out, well, gold tends to outperform. But equities were down. Okay, perfect. Makes some sort of sense that way. And yet, as equities opened and then traded today, the first trading day, they turned positive. So if you were just going to make a guess, you'd say, well, equities, stocks are probably going to be down 1% or something. Instead, they were positive by 1%. That's what we call a market tell. When something doesn't go down when it would have, could have, should have gone down, there's some strength underlying that. And we're going to take our cue from that and continue to have a little bit more risk on focus in currencies. And that's supported by the charts as well. Now, as we look at what's breaking down, well, we know that war has broken out. Israel came out and said that they're going to they want control over Gaza. They want to reconfigure the Middle East. They want certain things, and there is going to continue to be war and an escalation of tensions. Precious metals were up about 2%. Oil was up 4%, and the big outperformer on this conflict. Now, as we look at performance, euro and pound, the weakest performers, CAD, Aussie, Kiwi, the strongest performers on a day when there should not have been risk on and risk taking. This is good price action in a bad news environment. Gold and oil, well, those make sense, and they reacted the way they theoretically should have. Crypto wants to be defensive. It really, really wants to be. But here's the reality. It is not defensive. Not at all. Crypto's time in the sun was when there was zero interest rate policy and a lot of money printing happening. Crypto did very well in that environment. But since rates have gone up significantly, since there's competition from other assets, etc., crypto has really been stuck. And on days like today, when something like gold reacts, you can see where the true safe haven is. When people are nervous, they'll much more go to gold than crypto, at least to this point. Crypto has not been a defensive, it has been an offensive asset. Bitcoin Cash was the worst performer. Ethereum, Litecoin also down. And those three would be, as we saw in our velocity scores, those three would be the most likely candidates on the short side. Bitcoin itself still a little bit stronger than the rest. Now, market outlook, we know we're in a downtrend. We're nowhere below the moving averages, but this rally started on Friday with a big reversal, and then today it built upon that. I think there's a little more room to go, right? Could just be a one-off, could just be a one-day stabilization, but I'd expect more upside in the short term. As you look at equities, there's some room to go higher. If you drag your downtrend line, it would be completely normal and within reason to somewhat work your way up to the downtrend line before failing all over again. So I'm not ready to call this the bottom or anything like that, but I do think we're working our way back up towards some levels of resistance and upward channels and such, and I think that's going to continue for the foreseeable future. PPI out on Wednesday. FOMC meeting minutes. Now, this is not a Fed meeting. This is the minutes from the prior meeting. And then CPI comes out on Thursday. And CPI is the one that everyone's watching most closely. The inflation numbers, we saw a huge beat on payrolls. The employment picture is still strong. If inflation comes down as well, people are going to continue to say, we've got a Goldilocks scenario where the economy is staying strong and inflation is doing what it should be doing, coming down. Now, the last couple of weeks, we've highlighted Euro Pound on the short side. I think that's still a place to continue to look. To my eye, we've come down to the levels we thought we would come down to, which is the prior support. Okay, and then we should bounce, but that bounce should be small and fairly weak, and we highlighted this area, an inverse cup and handle, support, retest, small bounce. We called it like dropping a ball on the table. The first bounce is big, the subsequent bounces are small until you fall off the table. I anticipate Euro moving to fresh lows. If we look at crypto, Ethereum, Litecoin, Bitcoin Cash, these would be the cryptos most likely to continue lower. And Ethereum looks like the worst of the bunch. We're all the way back to the prior support levels. And once again, it's the bouncing ball. Bigger bounces followed by smaller bounces followed by an eventual falling off of the table. So could support hold here yet again? Possible. I would expect if it does, it'll only be for a day or two before ultimately we break and succumb to the pressure. You can just see that this is not, it's been spinning its wheels, and when all you can do is go sideways after you've already been in a huge downtrend, it speaks to there's not that aggressive, supportive buying that's really going to hold this thing up. It's very likely that we are going to have to print fresh new lows to find enough buyers to stabilize this trend, and the price action just seems destined for lower levels. So crypto markets continue to be weak. I would look at things like Kiwi, Aussie. This is a bit of a change, but it's the way the market's going. We want to do the Wayne Gretzky. We want to skate not to where the puck is, but where it's going. And I think there's a little more risk on going to happen here. So in conclusion, as always, use good, sound risk and trade management. We're going to keep you focused on what's moving and where opportunity lies. We'll have market updates throughout the rest of this week. Have a great week ahead. We'll see you next time. Goodbye, everyone.